So I would say for a day trader, right, I would
Mm.
say 1 hour time frame is a good starting point as your daily analysis. So what I normally suggest is if it's at the beginning of the month, right, then we can look at the monthly time frame um, to see what it's giving us, right? So since it's sort of the beginning of the month, we'll look at this one. Let's see what it says. We'll analyze the monthly time frame. So we are doing gold right now.
Okay.
We're going to analyze the monthly time frame. So what we want to what we want to highlight, that what's very important is the high and the low of our monthly candle. So we have the high right here, and we have the low right here, right? And then after you highlight your high and your low of your previous one monthly candle, right? The reason why we
Mm.
are highlighting the high and the low, it's because for price to go higher, it has to break the high of the previous month. For price to go lower, it has to break the low of the previous month. So that's why we highlight the high and the low. So after we highlight the high and the low, right, we want to highlight the area we think price will go to if it breaks the high. And I would say our next resistance was right here, and then our next support would be, let's say, somewhere around here first. This is the minor support, but then if price does
Mm.
break that minor support, it would go there. Is our next resistance, I mean support, is our next support. But is it making
Okay.
sense?
Yeah.
All right. And then, so from for the monthly time, for the monthly zones, right, you probably don't see them as much. So for people who wouldn't remember, I would say you can highlight that this is the monthly resistance, or this is the monthly support. And then weekly candles, right? Weekly candles, these are the candles that you can go at the beginning of the week on Mondays. That's fine. So that you just keep in mind what the weekly candle
Mm.
is doing. But I wouldn't suggest looking at the weekly candle the whole week. As long as you know what it's doing, as long as you have an idea, it should serve you well. So I would say that for our weekly analysis, but we're going to look at the weekly time frame. And looking at the weekly time frame, right, our monthly resistance are actually in align with what we were looking at. So I would say the low of last week, because for price to go any lower, it has to break the low of last week, and that's actually a hard area to break. Yeah, they are hard zones to break. Price actually tends to play around that area before it does break. So it's good to know that. Then the daily candle, right? I would say the daily candle, just look at it at the end of the night, end of the night. How did my candles close? What should I expect tomorrow? Because sometimes you can actually see your setup for tomorrow, and you know that you just have to wait for Asian to pass. And tomorrow, if price is at the area that you were anticipating, you have the
Mm.
setup. So looking at the daily candle, it kind of shows you the direction. We'll focus a lot on candlesticks, understanding the candlestick or what it's telling you. But let's say for right now, we can look at how price was ranging right here, right? As you can range, it was slowly pushing lower, right? But it didn't
Yeah.
it but in all cases, this is a very good one. In all cases, price rejected closing below this area. I don't know if you also noticed that, but price rejected this area in all cases. Price fell this time, the next time. They even tried dipping low again, but it failed to close below, which was only giving us which was only helping us anticipate price to push higher, because if it's failing to close lower, then price is most likely going to push higher. So it did push higher. If you look at the candle, right, you know your engulfing candle, right?
Yeah.
If you have an engulfing candle that's covering all of the previous candles, very similar to this one. Let me actually enlarge this. This is very important. This is actually very important. You know, like there's the basic engulfing candle that we are taught as a beginner trader, the basic information that's taught to everyone, right? We could easily say this or most of these candles are engulfing candle. If you look at this candle, it's covering the body of the previous candle. That could be highlighted as engulfing candle. But I know for some people they would highlight this candle is an engulfing candle because it's covering the previous of the range of this candle, right? And it's covering it really nicely. So they would consider this as an engulfing candle, right? However, I would say, yes, it is a nice engulfing candle, right? But this is just a basic engulfing candle, and price can do anything. It can push higher, definitely. However, it's not as strong as this type of engulfing candle. Now, if you look at this side, right, at the candles, right, these candles were ranging, right? They weren't pushing anyway, but this candle is covering the range, the whole range of this area. That's days that are covered by one candle. So this candle had so much pressure that it covered all of these candles. So that's what I would consider an engulfing candle. I would definitely consider this as an engulfing candle, right? Yes, we can also trade it, but if I was to see an engulfing candle like this one, I would be more in favor of this type. All right, and then after we got our engulfing candle, we are on today's candle, right? As you can see, today's candle, it pushed lower, but as you are pushing lower, what gold always does, gold always retests. Gold does not go anywhere without retesting. That I'm very sure of. So since gold is retesting in this case, right? Can you hear me?
Yes, yes, I can hear you.
All right. Since gold was since gold, see, it made this big bullish candle, right? So when if we're reading market structure on this pattern right here, right, or the structure that's right here, right, we have market that was consolidating right here, right, and then we have this candle that pushed lower, and then our next candle, instead of pushing lower, it did not. So we had this support, right? This is our initial support. This is our let's say our bearish trend support. So for price to go any lower, price was supposed to go to close in the range of these weeks. So it would make a weak fill first, and then it can continue going lower. But price rejected closing in the range of these weeks, which only pushed price higher, right? So price to push higher. So in this range, we had a range, as we all know, right? So when price broke out, it had to retest. So that's what we're saying. We looked for structure, and then we look for the breakout. After the breakout, we need to get the retest. So every time you are looking for a trade, whether it's higher time frame, smaller time frame, whatever time frame you want to trade, right, I would suggest looking for a range, right? Then after
Okay.
the range, you look for the breakout, and when the breakout has happened, right, even if you don't see the retest yet, I would suggest waiting for the retest. That's the pullback, and then price pushes higher. So that's the first sign, right? And then the second sign, the best sign would be we at the range, right? The structure right here,
Yeah.
right? And then before price went anywhere, right, it broke down this week right here. That's price breaking out. This is a fake out, and then price pushed back into the range. So every time you see a fake out, that's more confirmation that price will push in the direction of the trend, or the direction that market structure is showing you at that moment. Yeah,
Okay.
and what did you say?
I'm saying understood.
Yes, and that happens almost every time. So I would keep that in mind. Every time you see a fake out or something that looks like a fake out, it's a very good sign that price will most likely continue in that direction. Then So since from our daily candles, right, we are price is suggesting that it has higher chances of pushing up, right? I would say if it manages to break this resistance, this is going to be a very strong resistance, if you can set this resistance. If price manages to, let's say, maybe come up to here, then it will have higher chances of pushing up. But if it does not manage to break this resistance, then we won't have price reaching this area, which would only push price lower. So we need price to break the resistance that it's at right now. So we know that from the daily candle, right? So that's you already knowing that from early in the day. So when you're looking for trades, right, you're most looking for buying trades, and only if your structure is broken that you look for sell trades. So we're going to see how our structure can be broken so that we can look for sell trades. All right, now we're on the 4 hour time frame. So on the 4 hour time frame, right, I know where this resistance is coming from. We'll keep it. But on the 4 hour time frame, I wouldn't put as much, because yes, the tricky part with zones, you can use as many zones as you want. You can put as many zones as you want. But if you have too many zones, that means you have too many areas that you're considering. And most of the time, we tend to consider the invalid zones instead of the valid zones, because we're looking at way too many things, and less is the best thing that you could
Mm.
possibly want in the market. So I would or adjust it to come in close, let's say around here, because this is the area in the issue on the 4 hour time frame. That's the area that we want price to close above. Remember, I said if you're trading on the 4 hour time frame, you're sticking to that. So if we're looking at the 4 hour time frame, we're saying maybe or possibly we're going to be looking at this time frame for our entry. So I would adjust it to align with the 4 hour time frame candles, right? And then from what market is giving me right now, I would say we have support right here, right? And then we have resistance that's being created right now. That's right here. There is resistance that's being created. When I say there's resistance that's being created, right, I mean we had an up move, right, an impulse, and then price fell, right? It When price fell, it made a low right here, right, which price rejected with this candle, and then it came to close here, right? But when price fell, since this candle, let me remove that for you. Since this candle, right, it
Mm.
closed around here, and the opening of the next candle pushed higher, as you can see, and then it pushed lower. So there was resistance that had been created, right? And with the bullish candle right now that came back to the area, and even closed around that area, confirmed that there was resistance that has been created there. So we will put a zone, because for price to push higher, it has to push above this area. And that's all that I would put. Maybe we can put, since we already have resistance right here, so we know if price pushes from here, it will reach this area, right, the next resistance. But we need, if price will ends up pushing lower back into our range, then we would expect price to push lower to the next support, which is around here. The reason why it's our next support, it's because this candle closed there. The next one even pushed higher, but came back to close around this area, and then the next candle opened around this area. So we can anticipate that price, if it was going to drop, it can come and react to this area, because most candles have reacted to this area. So I'm saying if this candle came back and closed anywhere around here, right? Very high chances price will push all the way down here. A, because of the clean traffic. B, because it's invalidating structure right here. Because when I say it's invalidating structure, we had an impulse, a pullback, right? And this candle is confirming our reversal, right? And this is around 61.8 fibs. So that's structure A that has been creating. We're expecting price to give us one, right? This has been two and a three. That's what we're expecting. So if this candle was to come back and close back around this area, it's support, right? That's invalidating structure and telling us that price is higher chances of pushing down than going any further up. So we're already looking for buys. Our next resistance is this area, then we can push price higher from there. All right, is it making sense?
Yeah.
All right, so we move on to the 1 hour time frame. Now, as a day trader, right, the 1 hour time frame, I would say that's the one that needs to be your best friend, because honestly, 1 hour time frame, if you manage to understand how it moves, and what it reacts to, right, you can actually catch trades that will last you a minute or even just 30 minutes. Not you barely would hold a trade for an hour, but then for you to be able to catch those trades, you have to understand timing, because we all trade according to sessions, right? But in those sessions, there is a timing factor that happens. There are times when there is volume in the market, and there are times when there's no volume in the market, right? So what we want to do is to aim for the times when there's volume in the market. So that's when I would say your timing needs to be good. So in this case, right, let's make them a little bit small. Let's adjust our zones just a little bit, and then we will take this zone, right? It's in the middle of candlesticks. Your zones should never cut through candlesticks. And then we would put this one over here. This is the area that price broke out from. Okay, when I say price broke out from, you can see price came down, it made a low right here, created resistance when it gave us a bullish candle, pushed higher, but still came back to close below our resistance, which confirmed that this was now resistance, and then price pushed lower. So when it pushed lower, it then created a range. Now we have this, and then we have price coming back here. So now this is the price that this is the area that price is broken out of, right? So let's say if we've managed to catch the trade somewhere around here, that's fine, right? But if we haven't managed to catch this trade, then we want price to come back to retest before it pushes any higher. Now remember, we said gold always retests. We will be lucky if this candle was to push all the way up, because price had bullish pressure. If we were to go on our lower time frames, right, price had bullish pressure, and then when it reached resistance around this area, it didn't push the way it was supposed to push. We should have seen a lot more bullish movement right now by now, but it didn't push as much. That's why I was saying I'm waiting to see what news does, because price spent a lot of time around this area when it should have pushed. So right now, I would say with the opening of New York stock market in the next 30 minutes, we could see price pulling back before it goes any higher. Because right now, this is the 30-minute. This is the last time frame that I would say go lower. Even as a day trader, you could go to the 50-minute time frame to see what's going on, but I would say this is the last time frame. The 30-minute is the last time frame that I would want you to, or that I would like you to make your judgments on, because the 50-minute time frame is not creating any strong zones. It will create zones that will maybe hold for a few minutes, but the next it will break. So for now, I would say the 30-minute time frame. But on the 30-minute time frame, we don't really have any structure, because now if I'm saying we didn't manage to catch when price made a break on this area, right, this would have been the entry right here. For a weak fill, price made a weak fill, and now it's pushing higher. So your trades would have been on break even right now, because we would have targeted for the weak fill first. So we would have collected, and our last trade would have been on break even. But right now we have this. We have price needs to retest this area, right? We know that. So since we know that, I will move this zone to around this area. Now I need price to come back down to create support before it can push up. So since we're saying we're coming on the markets now, and we know that price is pushing up, price is some bullish power, right? Price is some bullish pressure. We want to enter this bullish move. So we are aiming to see if price can create support and then push price higher. So we want price to actually give us a bearish candle. Either it will come to retest this area, or we could even get price wicking into this area before it pushes higher. So having price come back into this area, that's okay. But the moment price closes, let's say anywhere around here, that invalidates any buy setups, because we will now be saying price is rejecting this resistance and it's creating support around this area. Price could come all the way down here and wick price off, but closing around this area would not be suitable for us. So we can see price coming all the way down and then it leaves a wick. That would be proper. That would actually give us even more confirmation that price will push higher. But if it, so I would say if a 15-minute candle or even 1 30-minute candle can close anywhere down here, but if the 1 hour candle was to close anywhere at this low, then that would definitely invalidate our buy setup. As you can see right now, price is leaving a long wick, which is very dangerous. Is it making sense?
Yeah, yeah. Meaning there is a rejection, price rejection up on the resistance, right? Since
Yes.
price is going to break.
Yes. So now we need, if price it was to going to continue anywhere anywhere going higher, anywhere from here, right? We would want this 15-minute candle to close above, right? Above this resistance. If it closes above this resistance and price gives us a bearish candle, that's okay. I would actually wait for that candle to complete and then wait to enter as price comes back to break that resistance. So what I'm saying is, let's say price comes up, it closes here, right? And then price gives us, let's say, a bearish candle that comes down here, and then it closes down here, let's say somewhere around here, and that would say price is creating support. So as price comes back up and it's approaching the resistance, I would watch out to see if price is going to close at resistance or even above, but that would be your confirmation for entry.
Okay.
Yes, and that would actually give you a pretty good win rate, because most of the time that's what price does. If price gives you a bearish impulse, it's going to come back to create resistance before it can push lower. But since price does not move in a straight line, it has to create resistance for it to push lower. For price to go higher, it has to create support for it to push lower. So yes, so that's how price makes the lower lows and the higher highs. But those are
Okay.
the ones that gives you the advantage. You just have to understand that when price makes an impulse like this, right, and then it starts giving you bearish pressure, right, let's say bearish candles, wait, right? When you wait, you attack price as it pushes higher, because the pressure that is giving you as it goes higher, right, it's not going to be the same pressure that's going to give you as it pushes lower. It will give you strong candles going up, and then when it's going lower, it will give you tiny candles. So if it's giving you smaller candles than the candles that are pushing higher, then you know that price is only preparing to push further up. It's the same as, like you said earlier on, you watch to see if momentum is slowing in the candlesticks, right? For you to say I'm going to exit your trade, you want to see the candles getting weaker and weaker, right?
Yes.
Yeah, so it's the same thing like that. For you to, even early in the morning, and you haven't even done any analysis, right? Or even if you're coming on the market right now, by looking at the candlesticks, it will tell you where price is pushing by just looking at the size of your candlesticks. Let's say if we were to go on the 1 hour time frame right now, this is the 1 hour time frame, right? And we are looking at the size of our candlesticks, because we want to look for a trade. you can see when price was going up, the candlesticks were pretty good, were pretty big, right? And then as price went down, the candlesticks are very small there. We have tiny bearish candlesticks, right? And then when price created a bullish candle, right? That was the rejection. Same as this one. Price was trying to reject, right? But price pushed lower. So we say a liquidity grab or accumulation that happened right now. This is exactly what happened because this was our initial reversal, but price pushed lower for the liquidity grab accumulation, whatever we want to call it. They pushed price lower because people were buying around this area. And then we had the first candlestick that reversed price, right? But we all know that when this candlestick happened, right, most people will probably bought around this area and their stop losses around this area, right? That's why we have this candlestick pushing up, fooling more and more people to enter, only for them to push price lower. So when they pushed price lower, they took out the stop losses, which only helps to push price higher, because for them to win we have to lose. So this only helps to push price higher. They had enough sellers in the market for price to push higher. So that's what we had. So we had this could have been a good sell setup if this candle right here, right, had closed bearish, but it did not close bearish and it was invalidated by, let's say, if you go on the 30-minute time frame, right, you see how price created a bearish candle, right? And then the next candle, it cleared the low of our previous candle, but it put back up to close inside our range and as a bullish candle. So that was our confirmation that price is most likely going to push higher. But if this candle had closed and let's say anywhere around this area, right, and as a bearish candle, price was most likely going to push lower. I definitely, it was going to push lower, but that was invalidated by that candle. So we should see price pushing higher if it can close above here, because right now it only made a weak fill. It made a weak fill, but it's not telling us that it's going to push high. It's still rejecting to our minor supports around this area. So is it making sense?
Yeah.
All right. But this is literally the only zones that I would say if you were trading, you are working with these zones. Because for you to watch price go higher or for you to enter and see price go high, you just want it to close above this area. The moment it closes above this area, you're just waiting for your entry. That's it.
Okay. So what you are trying to say is, me as a day trader, I should focus more on 1 hour time frame, do my analysis on each one, and my entry and exit on M30.
Yes, the 30-minute time frame, it's there to give you early confirmations if you can read it. Because if we were trading the 30-minute time frame right here, right, we would have gotten the confirmation with this candlestick, right, with this candlestick, right? But for someone who's trading 1 hour, so someone who wants the confirmation on the 1 hour time frame, right, then we would have had to wait for we would have had to wait for the full candle to actually close this candle, to actually close that's the candle that confirms that price is going higher. So the 30-minute time frame would be for times that you feel like being risky. Not that risky, it's just less risky, and it's just an early confirmation if you can read it. But for
Okay.
someone who would want to see the confirmation on the time frame, then this is the candlestick. So I would say use both time frames, because there are times when you can see the confirmation on the 30-minute time frame with everything in aligning with it. Then there are times when you can see the 30-minute confirmation, but it's not making sense with the rest of the things. So you can use both time frames for confirmation. But analysis, I would say 1 hour time frame and then 30-minute time frame to just understand what's going on a deeper level. That's it. I wouldn't say 4-hour time frame, because if you're trading on the 4-hour time frame, then you have to give your trade 4 hours to work out. That's why time frames are very important, because you can't look at a 4-hour analysis and then try to give that trade 1 or 2 hours to complete, and you're already feeling you're already annoyed by the trade or irritated, or you know how people get very emotional when they hold a trade for too long. So I would say, if you're trading a 4-hour time frame, then you have to understand that you're giving your trade 4 hours to complete. If you're trading a 1-hour time frame, then 1 hour, 2 hours at most, but 1 hour is more reasonable, especially if there's volume in the market. Your trade won't last for long. It will complete in a few minutes. It should.
Okay. Okay. I think I would go over again with the market structure.
Market structure,
No,
but
just
before you get to market structure, right, it's about the zones. Because the thing with zones, right, some people use supply and demand, point of interest, all of those things, right, but they all align. But then if they all align, right, then that means we can all use the same thing. But then if we're using the same thing, right, we need to understand that where is it valid and where is it not valid. So you need to learn how to what you use to draw the zones, right, and how to draw them properly. Because right now, right, if we were just looking at drawing these zones randomly, right, we probably would have been using these areas. Let's say you'd probably put your zone like this, right, because it's aligning in this area, right.
so let me ask this question. Like, what is the difference between a zone and a level on the market?
The zone and the what?
Is a zone the same as levels on the market? Like, are zones or levels the
Oh yeah,
same?
they are definitely, for me, they are definitely the same. I would say they're also the same as support and resistance. Support and resistance, right? Supply and demand, or even point of interest, they are all the same.
Okay.
Yes, it all comes down to drawing it properly, to you finding the area. Because some people use the whole chart, right? If other people were doing the analysis, let's say, I'm pretty sure from what you were taught, right, you'd go on the daily time frame and you put your zones, maybe something like this the whole area has to be reacting to it, right?
Yes.
Right, yeah. But then when you're actually drawing value, because the thing about zones is zones are created as market is moving. So they are created as market is printing. That's when your zones are created. The past zones, right? You can use those for your target and your exits. Those are like areas of interest, areas that you think if price reaches that area, it might react to it. But we're not saying the past price action is what's giving us the zones. It's only the action that's happening right now that's actually giving us the zones. Because if we are coming here on this chart, right, we are only looking at this low price created, the next resistance I'm expecting price to reach, the next support I'm expecting price to reach. If it's creating a range, then I highlight that range. Anything else that's happening, it really does not matter. That's why we have this low price created, we have this high that price created earlier this morning, and we have the next support price, the next support that price is reaching, and the next resistance that price is reaching. That's it. So this one, if we had not highlighted it from our earlier time frames, right, we wouldn't even have it. I would say the maximum lines, or let's just say zones, that someone should have on their chart would be 4 or 5 at most, but 4 should be the maximum.
Okay, so 4 to 5 maximum zones.
Yeah, 5 if it's that complicated, but 4 is good. 4.
Okay, so meaning the zones should be drawn at like the current areas that the market reacted.
Yes, the current areas that market is reacting to.
Okay, okay. On the time frame that you are trading on.
Exactly, because we're on the time frame that you are trading, price is going to give you your high and your low. It's going to create your resistance and your support as it's going. So that's what you use.
Yeah, with me, I'm a YouTube learner. I just make sure I make use of YouTube. I don't have any mentor, so yeah.
Now, I'm sure you're doing good. But yes, it's the areas that price is currently printing right now. Because for right now, when we're looking at gold, we're saying price made this low, right? And then it made
Mm,
this high during London session, opening of London session. So that's the resistance and support that we have. So we're waiting to see if price is going to break this resistance or if it's going to break the low. So right now it's attacking the resistance, and our all of our analysis is saying price should be bullish. So we're waiting for price to close above. When it closes above, we want to see support being created to push price higher. So we want a retest.
okay.
Yes. So it's not like there's a lot that needs to be put in. There's really not that much. That's the good thing. That's the good thing about trading. Very simple, because you can literally catch more than someone who's putting a lot of things. Because right now, I know some people will be putting, let's say, a trend line right here. They're saying
Yeah.
price is broken the trend line and they're expecting it to go higher, right? But we
Mm,
found that information without having to put the trend line. It's just there.
yeah. Okay, so at what time? Which country are you
South
located?
Africa. We're in the
Oh, you
same
are also.
country. Yeah, we're in the same country.
I thought you were in Canada or somewhere.
You know, we're in the same country.
Okay. So what time do you do your analysis here, and when do you expect to, have your reversal patterns?
Okay. I trade. I like trading London opening, so I try to be on the markets. Let's say by 8 o'clock. If not 8 o'clock, 8:30. But 8 o'clock, just to see what's going on. If there isn't anything interesting, then I can come to the markets around 8:45. But if there's something interesting going on, then I would be on the markets from 8.
Okay, that's when you do your analysis on
Yes.
London Open.
So it's a matter of how market is reacting earlier on to Asian closing around that time, because most of the time for a move that's going to be presented during London opening, right, they normally
Yeah.
give us the structure just before London opens, and that's around Asian closing and Asian closing and Frankfurt opening. That's when we get the structure. You should download Forex Hours.
Okay.
It
Forex.
it Yes, Forex Hours. It will notify you every time when a market opens or closes. You can set up the alert.
Okay.
Yes.
So which are your favorite pairs?
I only trade gold, pound USD, and pound yen.
Gold, USD, pound, USD.
Pound USD and pound yen.
Okay.
Yes, only those three.
Okay. And how is it been going for you? Is it doing well?
Yes, it's going very well. Once I realized that I had to trade those three pairs only, changed everything. Because when you look at a lot of pairs, right, you tend to miss a lot of trades because you're looking at the wrong pair. You have too many pairs that you're watching. So we tend to miss the good trades.
Okay, so these are the major pairs that you are focusing on, or you are focused on.
Yes, because I know in the morning pound USD would give me something, and in the afternoon that's for gold. gold will give you something. So I know both sessions, either way, I have something that's working in my that will give me a trade if I want to trade both New York opening and London opening.
Okay. So you also do your analysis on the H1 and you check on M30 for your patterns to form your entries and your exits.
On my, I check on the what?
I mean, you also do your analysis on H1, right?
Yes.
You're also a day trader.
Yes.
Okay. Okay. No, I think I have to focus more on the zones,
Yes.
how to identify the major zones.
I think I have
Where,
another video on them. I will send you the link.
okay, please do, because I think that's where I have to focus more on.
Yes, I'll definitely do that. All right. The session, I have a time limit and it's running out. This is it for today. Maybe you can, I don't know, do you have a few pairs that you like to trade? Because I would like you to select your few pairs, right? And then you can draw your zones on them. And then I can see where you need to like adjust them or where you need to concentrate on.
Okay, no, I would surely do that, and I'll send it to you on your what's the name, Telegram.
Yeah, that would be perfect.
Yeah, so kindly send me the videos on how to draw the zones properly, and we'll speak again soon.
Yes, definitely.
Okay. So yeah, I think I am okay for now. If I am struggling with anything, I'll just send you a message, and whenever you are ready, you can come back to me.
All right, sure. That was great.
Thank you. Same here. Thank you so much for your time.
All right, have a good day.
Same to you. Same to you.